Alright, I want to talk a little bit about partnership. Partnership is a kind of word that we use pretty loosely, okay? So, in everyday life, in business, we can say, well, this is my partner, right? This is my business partner. We form a partnership. But in this partnership, it's like, business partnership, like in a sense of law and tax, okay? So, you have to treat that seriously, okay? So, the partnership, generally, there are two kinds of partnership. The one partnership is called GP, so general partnership, right? The other is LP, right? It's the limited partnership. So this is going to appear a lot in structured financial products, where the GP, right? So for example, there's a project, the GP, the general partner, will handle the operation of the business, and LP most of the time is some structured products. Or some funds, or basically someone rich that invests in the business that do not involve too much in the operation of the business. And for this GP and LP, as I said, there are two facets, right? So one way is talk about the taxation, the other is talk about the liabilities, right? So first, let's look at the liabilities, because the GP and LP's liabilities is different. Okay, the general partnership is going to be unlimited liabilities, unfortunately, right? But the LP, on the other hand, just imagine LP someone rich, and yeah, unfortunately, someone rich, they give the money. They try to avoid the risk. So LP is limited liability. Okay? So yeah, that's from the owner's liability point of view, right? This GP is unlimited. The LP is limited credit liabilities. Okay? But remember, we're talking about tax, right? From tax point of view, whether it's GP or LP or just a partnership, okay? So the partnership is, just imagine like just different person doing a business and come together. So you know what? All this tax liabilities and all that flow all the way to the partner, right? So the tax, you won't have some like corporations. For example, the corporations will have like a double taxation. Tax at the corporate level, and then as the holders, the owners level, right? Especially if you're doing the dividends. But for partnership, it doesn't really matter, okay? And you just flow through the partner. And partnership have advantage because income that is taxed only once, okay? We'll talk about that detail because you must wonder why choose the partnership? Why not choose, you can choose like LLC, right? Because this can still, like for example, single member LLCs are like disregard entity. So you know what? The tax, unless you like select, you declare, you select specifically for tax as a, you can like change and choose to tax as a corporation, but that doesn't really matter, right? You can choose this, then disregard entity, the tax responsibility will go to the owner, to that single member. Why not choose that? Because partnership do have some quirky, law, especially tax law involved. That's income, especially income tax only one. This can be used especially for a project that lasts for for example, 3 or 5 years. Then the income, invested, and the income go back at once, and then you're going to tax once. Okay, and you do not tax twice at some corporate level, then flow down and then dividends and tax again. There's no double taxation issue, but rather flow to the individual. Not individual per se, because partnership, the partner, not necessarily is a person, right? It can be any form of business entity as well. So, that's a lot, right? So yeah, that's the partnership.